The bigger the bucket, the more you pay for it. So we look at how much money can we make? Well, we're going to shrink the size of the bucket. So I start with the minimum for a preferred rating, which is 150. Now, anytime we pick the size of a bucket, right? So for right now, just to create the visual, this is for Brianna, 23 years old, female. I'm just going to put B. We're doing 150,000. There's going to be four numbers, right? One number is the minimum amount of coverage or it costs for this bucket, right? That's the minimum. The other one's going to be a permanent, then a target, and then a maximum. Now, the illustration is going to give these numbers. What it means basically is that the cost of this bucket is this minimum number. That means that if it's like $20 a month, then for a $150,000 bucket for you to save, it's going to be a $20 a month, right? Think of that as the cost of the bucket.
Right.
From there, you have a permanent policy number. This is the, if like where you are right now, I want 150,000 of permanent coverage. You get this monthly number that says that's the cost if you want this policy to be permanent. It'll build some cash value, but for the most part, you're doing it just to make sure that you have permanent coverage. The third number is the target number. This target number is a mathematical number where they pop out and say, if you pay this number for the same size bucket, then you're not only going to get your money back, but you're going to be in a position where you're making money. It's a well-funded plan. So the target is what the illustration tells you. That's a well-funded policy. If you pay this amount, you're likely to double your money in a certain number of years. And then the last number it's going to give us is a maximum. The maximum is basically that IRS rule. They say, hey, don't go over the maximum because we don't want to have to look into this account, basically. So there's a maximum number. Hey, William, if you gave us this much money a year, that'd be the maximum amount you could do for this size bucket, right? Of those four numbers, it's a sliding scale. It's flexible. So clients ask me all the time, what does it cost? Well, anywhere between the minimum and the maximum. And in some cases, you don't have to pay. If you have enough cash value built in there, it'll pay for itself. And we'll talk about that as well. So when I flip over right now, we know I'm looking for a bucket that's about 150,000. I'm looking at the target number because I want it to pop out and tell me what the suggested premium is. And then we're going to break down those numbers and I'm going to show you how the money will grow. And then I'll answer all the questions of showing you, okay, if you did it for this much, this is how much it would grow. All right, so the target premium for this size bucket, basically that third number, it's saying would be $57 a month. So if I flip back for the target, they're saying $57 a month. That means if you paid 57 a month, then over time you're going to be making money. The guideline level premium, so it's saying over here, the maximum for this size bucket would be about $120 a month. They're saying that you could put up $120 a month into that bucket and it'll grow for you over time at a maxed out kind of rate. The minimum number right here, 373. I have to divide that by 12.